Hey traders, my morning video. Basically, I think I'm sorry I haven't had any videos out for a few days. Mother had to go in for surgery, so I've been dealing with family issues here at home. So been pretty preoccupied, and I haven't even been online too much. But any rate, what I'm seeing, what I'm theorizing, we got 2 more days this week. I think before the week's out, we are going to test the midline of the uptrend. Be the second test. I think that's ultimately where price is wanting to migrate. And as you can see, this is a accepted VPOC for this week, developed last week. And so far this week, the VPOC, developing VPOC, is established even higher than that. So we're actually, the term short in the hoe for the week, based on volume profile, we are actually short in the hoe for the week versus the where the accepted buyers and sellers met at higher prices this week. So something to keep in mind. Yesterday's sell-off actually gave us a nice little discount to come into today's market. But my ultimate goal is to see us testing this trend line in the next 2 days for the second time. So we'll see what happens here. So that's why I want to be very careful suggesting puts are going to come in here, or we're going to have a big selling pressure in today's market. I don't think we're going to have that. I think we're actually going to have a natural bias to the upside. Okay, on the Qs, I actually think the Qs look more constructed than the S&Ps going forward. And the Qs have been holding out like a champ. And also keep in mind on my charts, these are the expected moves for the week. We're just smack dab in the middle for the week on the expected moves. So the option sellers this week are actually getting paid very well with so far the price action. So there's a lot of whichever side of the coin you traded on or came into the week, they're actually getting paid very well on based on this week's action. But basically, the developing VPOC is just slightly above where we're ticking right here in the pre-market. So I definitely think we're going to be coming up to at least this high today, if not higher. And this midline, we're going to be back testing at midline quite possibly today because we're actually in very close reach for that situation and a much more ideal situation for tomorrow on that midline cross. And we're holding on this secondary trend. We're holding the midline on that one so far as we speak. So we'll see what happens in today's session. I still have, based on the price action we've seen so far this week, and the fact that we sold off yesterday really hard, we lost like 1,000 points on the Dow, but on very light S&P volume. So that is a big tell to me that the sellers are not really wanting to jump on board to push prices lower, at least as of yesterday. So we'll see what happens today, but we'll see how the volumes come into the markets today. But that's something, a major takeaway that I want to bring up for yesterday. The volumes did not seem to support the sell-off, and it looks like we're trying to put in some constructive build here. And the first of the week, we were putting value way up here at the 191.72 area. So basically, the highest volume to do business has been accepted at higher prices so far this week on a weekly basis. So that's another takeaway. We're even putting in higher prices for the week versus last week. So you got to be really careful that all that action yesterday is about to get taken away. So it's something to keep in mind. Now, on the flip side, we are getting relative weakness with the IWM. We still have this primary downtrend. We haven't back tested that, but keep in mind where we are located on price versus our MAs and stuff. A tick up into this trend line today is highly likely for the IWM. So that suggests to me we are going to see an outperformance in the Russell today versus the other indices. There's a very strong chance for that. And we're actually seeing a nice little bid in the crude oil futures this morning supporting that thesis. So keep that in mind going forward here. Still, we were getting awful close to turning in. This line down here represents turning into bear market territory on the Russell, and we are still holding out above that level. So something to keep in mind going forward. This is a little bit after 5 o'clock in the morning, so this is even earlier than normal. But I have a feeling we're going to have extremely low volume in the equities in the pre-market here. So keep that in mind going forward here. But we do have almost a $2 move up in the crude oil as we speak. So something to keep in mind going forward here. Before I click on those, I do want to talk about the US dollar JPY. This is going to be very important that we hope, that this trend continues. Uh, the decline in JPY, that is supportive of the carry trade. So we actually want to see a continuation of this downtrend, that the JPY continues to weaken. That way, foreign investors can take loans out in the uh, Japanese yen, and the appreciation of the dollar will be a net benefit for that trade. So keep that in mind going forward here. That is a powerful force for Asian equities and the Asian Pacific area. This scenario going forward. Okay, and then also you got your and this is your second currency pair you really want to see very bullish. This is supportive of the Asian markets. A strong, Aussie dollar, US dollar relationship. It looks like a bull flag. That encourages, that's a risk on sentiment in the markets when you see the Aussie dollar appreciating versus the US dollar. So keep that in mind going forward in the equities. So right now we're putting in a nice little bull flag scenario. We'll see if we see some continuation in today's session. So that's another reason I'm a little bit more bullish these markets. Now I'm going to start with the crude oil space. I mean, we are catching a little bit of a bid here. I mean, it's nothing to write home about, but it's something to, it is the beginning of something. So, but at any rate, we're getting a little bit of a short squeeze here in the crude oil space. So that's a good thing. And that they are talking about meeting to have some talks. I don't know how supportive any of that can be, but this could be a bullish scenario going forward here. And if you go and in the primary downtrend here, the 1 hour, I can't use that one, I don't think. Let's see the 4 hour here. See what we can come up with here. Okay, on this massive downturn right here, put a fib fan in, and we'll see. Are we even getting closer to that? I had mentioned earlier, since we put new lows in, that changes our trend on the crude, this primary trend. It even puts it out further in time, unfortunately, since we've recently put in further lows. So that's a disappointing scenario here. But at any rate, since we got the new lows right here, there is a potential for a nice short squeeze scenario with crude oil. With this, there's a nice gap into the primary trend levels. So keep that in mind. We are in a rapid move area, potential rapid move area, based on Fibonacci analysis, because it's so oversold. So that is something to keep in mind if we were to get constructive talks on the outputs, or even some sort of military action that would disrupt crude supplies. Any of those things could really put a nice little short squeeze in the crude oil space. Now, gold here looks like a bear flag potential continuation pattern setting up for gold. So something to keep in mind going forward here in your trading. It just does not seem to want to lift. It's one thing for gold to come down and touch the lower value area and just have a rapid bounce, but to stay down here as long as it has, that's building out a bear flag for continuation lower, in my opinion. The bonds are catching, treasuries are catching a bid. So considering the true $1 trillion in debt being issued to support this economy, and we're still maintaining a bid in that scenario, I think that is still a more of a bullish scenario. Typically, when you issue huge amounts of debts into the marketplace, you get a responsive. Most countries get a big dip in their treasuries, resulting in higher yields, and that's a bad scenario going into the future for U.S. Treasuries. But instead, we had the flip side. There's a lot of confidence in the U.S. Treasury that they're going to get us out of this mess, and so they're buying up the Treasuries and supporting lower yields in the markets. This looks like a bounce spot for the diamonds, in my opinion, going forward into today's session. We're coming off the 200-day, 1 hour trend line. So keep that in mind going forward in your trading. Uh, this week's inventory is right at this price point. So price has been accepted down in this area. We'll see what happens, see if money can come in and support prices higher today. But my gut suggests we are going to migrate higher into today's session. Volatility is really not a measure of market direction in these times, but it is an indication of a measurement of fear in the markets. And as the VX starts fading off, that means, in my opinion, the fear is starting to reside. The fear is starting to come out of the markets, in my opinion, and we have actually we're breaking out of the primary fib fans, but we are still in a heightened area of volatility. So it's nice to see that we are making a little bit of constructive progress in that regard. Now, what I do like to always check in my videos, we're down 2.9% on the front end, and then I go out about 50 days, and I want to look at that 48 days, and so we're down out 2.3%. So basically, the front end of the curve today is coming off a lot faster than the back end of the curve. So keep that in mind going forward in today's session. So basically, the front end is what's really getting whipped around really heavily here, and so uh, uh, it would be much more supportive for higher prices if we would even have a higher uh, if things would be coming off even faster on the longer end of the curve. But so far, they're not doing that. So just something to keep on your watch going forward. Okay, yesterday, some of the most actives were the VX calls. So all of these are going to be getting hit hard today. Anybody who held those overnight, those are all coming in pretty hard today. And then some of the biggest losers yesterday were your Carnival Cruises, your Boeing, and then your American Airlines. So the stuff that the airlines. So the major stuff that has been getting hit really hard because of the coronavirus, they came in the hardest yesterday on this with all the recent news, and we even had our semiconductors starting to sell off pretty hard yesterday. They had gotten way ahead of themselves, and so they actually started coming in pretty hard, suggesting there might be some rotation out of the technology space. So keep that in mind going forward. And then let's see here, what else? And then this is some of the options, most active options. These puts, you're getting 300% returns on some of these options yesterday, and these really beaten down sectors on the put side. And all those trades look to be reversing today, in my opinion. Is that all of them? Yeah, okay. And so what I'm seeing today on the flip side, we have top volume leader today. We have a $1.80 or over $1 bid in Carnival Cruises this morning. That's the highest volume so far this morning. Delta, Boeing, AMD is a leader here. We've got over $1 pop in AMD this morning. So virtually everything that got sold off and dumped yesterday is actually getting a flip. They're flipping it over the other direction today. So just something to keep in mind going forward in your trading. Heck, even Facebook's catching a bid, as there was a bunch of bad news out on ad revenue yesterday. So some things to keep on watch going forward in today's trading. Okay, one of the main things I saw happening yesterday, that was Zoom Video. They were taking uh, profits off of this big run up over the coronavirus on Zoom Video. They were taking profits, taking them hard, and basically we closed right on the weekly expected move low for the week on Zoom Video. So this is something I'm definitely going to have top of my list going forward. Look at this, look at this, $7 off, um, on these ticks from the close. So it's 137 on the close. So this is one I'm actually going to be looking to the long side on the open today. I doubt they can even keep these prices this low into the open, but just one that I am keeping on watch going forward here. I might actually be dabble in it a little bit in the morning, uh, early in the morning for a potential bounce trade going forward. Okay, one of my most bullish patterns going forward here, and that is Netflix. I think it's trying to set up for a breakout scenario. The swing low here is a must hold area for Netflix, so this is something I'm definitely going to keep a close watch. We're up about $2 in the pre-markets, $2.50 on Netflix going into today's session. So this is one that I do think is going to be building out up in the higher area if the markets do tend to hold. And it is trying to build a nice solid base to break out to higher prices over 400 in my opinion. Now on the bearish side, below 248 is very dangerous for Apple. So we're going into today's session realizing that we are on where the bears typically tend to accumulate. Below the 248 is an accumulation zone for the put side. So keep that in mind. Apple is a major market mover, and I know a lot of people every pop they're shorting Microsoft. We're getting over $2 pop this morning, $2.50 pop on Microsoft, and it has come down, and it's right below the midline on the primary downtrend. So this one here is definitely a potential. We want to keep a really close eye on that. If we can start getting back above that midline there, then it's going to be quite bullish for the markets. So that's we did manage to test that 2 days ago. We actually tested it yesterday. Let's think about how bad that tape was yesterday, and we did manage to test that trend line, and we're already almost back up to that here in the pre-markets. So quite constructive build out in the pre-market here for Microsoft. So that even supports my claim for higher prices even further. I think Alibaba probably going into the open here, we are going to be probably opening right on this midline for Alibaba going into today's session. So that is one to definitely keep on watch going forward here. Getting above that midline at the open would be quite constructive for a continuation pattern and quite possibly a breakout pattern to make a run back up to the 196 area in relatively short order. So this is one definitely to keep on watch. We do have some relative strength showing up here in Alibaba this morning. Another one which has been really hammered pretty hard after yesterday's session, the past 2 days session, was AMD. And this is a responsive buy point down here where AMD's been trading. So just definitely something to keep on watch to see if money comes in and supports price on AMD coming into today's session. Definitely the semiconductors have been outperforming this whole leg up, and the past couple of days it seemed to be a little bit of rotation coming out of the semiconductors, like they may have gotten ahead of themselves. So just keep that be aware of that if we were to catch a bid in the markets, that the semiconductors would probably lead the way to the upside in my opinion. And then we also have NVIDIA in the same boat. Similar situation down here is awful close to a swing low for this consolidation area, and we are preparing to break right back out. But right up here is the volume point of control. We are preparing this morning to break out of this primary downtrend from the beginning of the collapse of the markets. So keep that in mind. We've poked out multiple times here, and we've come down hard like an overbought reset, and now we are setting up for a potential for the bulls to come back in again, in my opinion. So something to definitely keep in mind going into today's session. Okay, and then I'm going to finish with XLF here. My videos get a little bit long here, and this here not looking too pretty this morning. So I don't want to get, like I said, I don't want to get too basically we don't really have any, we got a slight bid, 50. We're basically right here. So um, that's why I don't want to get too. I'd much rather see a bullish buy signal in the financials to support action, bullish or bearish in the markets. And since I really don't have either or this right now, uh, you know, I'm probably going to wait at the open to see if I get some sort of confirmation signals before I actually initiate uh, directional trades in today's market. Okay. Uh, I do apologize for not being around for a few days, but please like the video if you like it. I gave you some ideas and stuff. Please leave some comments down below, and I will try to put another one out in the morning if I can. So, at any rate, good luck and good trading, and hopefully we make some money today.